Let's talk through the points that are laid out in this op-ed. First of all, inflation is job one. How do you plan to go about fighting this? What are the key steps that Americans should know?
Well, absolutely. The economy we have right now is in a transition from this period of historic economic growth to a period that can be more stable, resilient growth. That requires focusing on inflation and doing so from a position of relative strength. The U.S. is in a better position than other countries to do so, in part because of the strength of our labor market recovery, the strength of household balance sheets. So that goes to the three steps the president laid out. The first is give the Fed the independence and the space that it needs to operate. That is not something that we can take for granted, particularly given past presidents' actions, and the president today will make very clear that that is what he intends to do. The second is to lower costs, make things more affordable for families during this transition period, and we are taking every step that we can to do so. Releasing oil from the Strategic Petroleum Reserve, as you mentioned, building more affordable housing supply, reducing internet bills, growing more crops in the U.S. to increase supply of food and bring down prices. All of those are steps that we can take right now. And the third is about bringing down the federal deficit. That will reduce price pressures. We've made a lot of progress on that front. Deficit down $1.5 trillion so far this year. We can do more. We need Congress's help on that front, but that's going to be our priority.
Hey, Brian, none of those steps really are going to address the skyrocketing costs that people have seen at the gas pump or in line at the grocery store, or what they've seen either in rent prices and things that have gone up. None of those will fix things in the very short term. These are long-term issues that maybe will help down the road with some of the supply chain issues. SPR release didn't work, didn't bring oil and gas prices down, and we've seen a great deal of inflation that's come since then. I think it's great to stay out of the Fed's way, let them do their job, but none of these other things are going to have an immediate impact on inflationary prices.
Well, there's no single silver bullet, but I respectfully, I think that these are steps that really do matter in both the immediate term and the medium term. The SPR release helped to blunt upward pressure on oil prices. We have an ongoing challenge with Putin's war in Ukraine that we are focused on. But take something like housing that you mentioned. Building more affordable housing supply, yes, it doesn't happen overnight. But the sooner we start that process, the more we're going to start to relieve pressure on the market. And at the end of the day, for a decade or more in the United States, we have underinvested in building housing supply, and now having an all-out effort across the federal government to work with states and localities to encourage better zoning and land use reform, that's exactly what kind of thing we need to do to actually make sure that a year from now, 2 years from now, those housing price increases are blunted and start coming down. So even as we're taking an immediate step, for example, the president reduced internet bills for 50 million Americans. That doesn't solve the entire problem of household balance sheet, but it does make a difference at the margin. And we're going to keep working on every issue that we can, even if it's going to have an impact in the medium term, because those are things we need to do as a country to move into this more stable, resilient period of growth that is possible going forward.
Well, Brian, it's Brian. Listen, we can debate the SPR thing all day long. I mean, we haven't had a refinery built in the United States in, 20 years, because fossil fuels are going away. So why would anybody invest in that? And that's what we're going to get. But you mentioned the deficit, and that's a good news. The deficit is coming down, and the deficit's coming down because tax receipts are soaring, correct? Tax receipts are booming, are they not?
So there's two reasons why the deficit has come down. The first is that we have ended pandemic-era programs that were spending out. And again, that's not a foregone conclusion. That is a function of an effective COVID response that has allowed us to responsibly wind down emergency programs. So the spending is coming down. That's one. The second is booming tax receipts. But the booming tax receipts are directly a function of the incredibly strong economic recovery that we have had. The upside surprise on tax receipts is a function of stronger than anticipated economic growth, generating more tax revenue. Both of those are elements of the kind of recovery that this president's policies have driven. So yes, it's both tax receipts and spending. That's connected to the type of recovery that we've had. And now we need to build on that with tax reform.